Good morning, everyone. Yesterday, we saw a massive sell off in global tech stocks, fears over inflated AI valuations that we talked about in our quarterly report, as well as we mentioned actually quite often. And massive spending triggered a rout in Alphabet, Qualcomm, and ARM holdings after disappointing earnings and guidance. As also US equities, of course, fell and the dollar rose, Bitcoin dropped to the 70,000 psychological support, revisiting that level since the first time um, since November 2024. So risk sentiment has definitely soured because we've broken the previous low at 75k. Okay, and currently, and we're looking, of course, at this in a logarithmic scale, we are sitting at the 50, just by the 50% of this entire uh, leg that started off the bullish run back in 2022 in November. Okay, this of course is a critical level now for us. Okay, and what I wanted to do here today, I wanted to give you two Elliott Wave scenarios. Okay, that actually one points to a reversal at the current level, perhaps even lower, but a reversal indeed, and that will be the last leg to the downside. And the second scenario points to a short-term pullback and then further continuation. So, key um, support here at 50 or the 50% anyway. And if we do lose that level, then that opens the door down to the 61.8 Fibonacci retracement, which is at around 58k. And this could actually take place in either scenario. But let's just look at this a little bit closer now. Now, typically, waves, impulse moves move in five waves, right? So one way we could see this potentially is that the five wave move to the upside ended for Bitcoin in January 2025, just roughly a year ago. And then what happened and what currently is actually printing on the chart is an A, B, C correction. Okay, so this correction is considered to be a flat pattern. We have an irregular false break above the previous peak, and this is followed by a five wave leg to the downside. Typically, an ABC flat pattern is a ABC, ABC, 1, 2, 3, 4, and 5 formation, which means that if this is our 1 and this is our 2 and this is our 3 and our 4 and our 5, which is likely, then it means that we are actually currently in the final wave of the final leg of this particular pattern. So this is the scenario, the first scenario. And looking at it also from a different perspective, we would say actually since we have the five waves already done, we will connect waves 2 and 4. Okay, this is our channel. And then wave 3 to the top, just to see if there is any guidance in terms of where could this stop potentially. And look at this. If you see this two standard deviation sort of distance of the standard deviation of this particular upward move, we've extended back to that low as well, right? So that gives us another point for support. So it is the 50. It is a significant major support, and it's also a two standard deviation away from the initial trend to the upside at the time where the RSI is quite oversold, near 20. Okay, these are not typical oversold levels for Bitcoin. Last time we saw that oversold 1930, it was wave 2 in August 23, and look what happened since. Now, this is one of the scenarios. I just want to give you a couple of levels to play with. Typically, when we have a five wave leg and we have done waves 1, 2, 3, and 4, we'll measure the net distance through these waves to see where the fifth wave could actually finish. And again, our 61.8 Fibonacci extension shows exactly the level that we've reached currently. So the next leg down, that's why I was talking about the risk of the 61.8, is at the 100%, which is at 50 to 50. However, sometimes we do see the 78.6 also, you know, coming into play. So this is around the 62K level. So this becomes literally a buy zone, I would say, for long-term trades. Now, if we start moving up, we cross above wave 4, above wave 5, we reach new highs, this continues to new highs, and this is indeed our play. However, if we continue higher and for any reason we see this holding at the 50%, which is the previous wave 4 or 38.2 or even 61.8, I might as well just say the 78.6. This is our line in the sand. We could still see this extending lower. In this particular case, we would be dealing with a 5 wave end up here and an actual diagonal pattern. This would be an ending diagonal pattern. Okay. Typically, this means that we are going to see an ABC correction, and then, only then, are we going to start correcting, reverting. So it's typical that corrections in 5 wave legs down to the 50%, the first wave to the downside, would typically correct deep down to the 78.6 perhaps, which brings us down to 40K. This is, of course, a very dramatic level to talk about that early. But one way or another, between the two scenarios, long term, I would say, they both suggest that there's going to be a bounce coming fairly soon. Where this bounce is going to extend to, it's of course a question that we still cannot answer, but we can only assume that if this is the bounce indeed, we should be looking at the previous support at 80K becoming resistance or not. Can it flip? The 23.6, 38.2, and again the 50, which comes at wave 4. So these 98, let's call it 100K, becomes very, very, very important. Okay. If we did come up to the 50% and stopped and reversed, this would confirm an ABC correction and deeper move to the 61.8 at 62K, 63, the 78.6, which is at 53K, and perhaps even the 41K, which is the 100% Fibonacci. But as I said before, any way you look at it, a bounce is expected either to complete wave B or to begin wave 1 in the flat scenario. In both cases, this is a 5-wave leg, okay? And what is important here to consider is that if there is imbalance indeed in the short term, then long positions could be taken into consideration. We're also dealing with a very, very important support over here. That was a previous high, the all-time high in November 2024, which, by the way, comes very close to the 21 all-time high and the November 2021 high. So there is potential for further downside in the short term, but I would put it like a stop to it at around the 65K. Whereas the move to the upside could potentially, once we break above the 80K, could take us all the way up to 100. So for me, that is the bullish scenario in the short term in both cases, and then bearish scenario, 5-way drop, and in the case where we see an ABC correction and an ending diagonal, or a bullish scenario where this is a flat wave C and we are going to reverse to the upside. So I would be really watching this 70K support very closely. A bounce here is likely given the oversold conditions, but the structure favors a deeper correction if we do close below this level. So to the breakdown targets, we're looking at 64, 65K, and then below that is the golden pocket, which comes around 52, 50, 55 zone. So trade safe.